This week on Moving Markets, Parliament allowed Malaysia's debt ceiling to be raised, AirAsia posted dismal results while work-from-home beneficiaries fared better, rising on Bursa Malaysia, and finally, one of the world's most valuable companies goes public. The Dewan Rakyat passed the Temporary Measures for Government Financing Bill 2020, more simply called the COVID-19 Bill. This is not to be confused with another COVID-19 bill, the Temporary Measures for Reducing the Impact of Coronavirus Disease 2019 Bill 2020, which provides some relief for those unable to fulfill their contractual obligations. This bill will allocate funds for the stimulus packages announced this year, the Prihatin Rakyat Stimulus Package and the Penjana Short-Term Economic Recovery Plan. These plans cost 45 billion ringgit and need to be paid for somehow. And that's why one important component of the bill is that it would temporarily raise the debt ceiling from 55% of GDP to 60% of GDP. So what does this mean? Well, it means the government can borrow more in order to finance much needed support measures, but not without risk. Raising the ceiling might draw the eyes of international ratings agencies like Moody's and Fitch, who could potentially downgrade Malaysia's sovereign ratings. A lower rating would mean Malaysia is seen as a riskier country, and in the past, a downgrade tends to be followed by outflows of foreign funds from both the equity and bond markets. We might even see the ringgit weakening. But the saving grace is that most governments have been spending more to boost their economies because of COVID-19. So the ratings agencies are likely to give this a pass for now. No surprises here, AirAsia sank deeper in the red in its second quarter as travel plummeted since the onset of COVID-19. Its second quarter losses widened to over 992 million ringgit. For perspective, the group made over 17 million ringgit in profit during the same period last year. AirAsia has done quite a bit of cost cutting in the past few months, including layoffs and reducing fixed costs, but it's hard to see air traffic bouncing back to pre-pandemic levels anytime soon, so the airline's chances at a full recovery are limited. A stock you might have missed, telco company Timecom saw higher sales across all its segments, as well as high requests for speed upgrades in the last quarter. It's a company that has benefited from the massive shift to working from home, and Time's core earnings in the second quarter came in flat year on year, but surged 20% compared to the quarter before. Plus, the pickup in economic activity recently should drive stronger performance for the rest of 2020. One fun fact about Time, you may know them as a broadband provider, but they also have strategic stakes in international submarine cable systems that connect Asia to the rest of the world and back. And finally, we may soon see the biggest initial public offering of all time. Alipay owner Ant Group has filed paperwork for an IPO in Hong Kong and Shanghai. Ant Group is the world's most valuable fintech company and counts Alibaba as a major shareholder. This will be a massive listing. It's set to raise a record-setting $30 billion, which would beat the Saudi Aramco IPO, which raised $29.4 billion last year. Many are also reading into the fact that Ant Group has decided not to list in the US. This seems to be all part of the long-standing US-China trade war. So could we see more companies shun US markets as a result? Only time will tell. And that's what's been moving markets. See you next week.